Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So in the last few weeks I've been looking at my portfolio again, just trying to find companies that are still undervalued that I would like to continue buying moving forward. And in today's video we're going to talk about one of those companies that I have had in this portfolio for a very long time. I haven't added to this company for quite some time. So what I would like to do is just to kind of give you an overview of what the company does, then talk about the financials, and at the end I will tell you exactly what I'm going to do moving forward, inshallah. But before we do that, as always, of course, join us in the Patreon account where you actually get access to a lot of things, including the Discord, including the buys and sells that I make every single week or every single month, and you got the family portfolio, you got dividend trackers, and so on. So there's a lot of things that you can get your hands on, inshallah. It will cost you about 15p per day. If you can do that, that would be absolutely amazing. If you cannot do that, of course, make sure you like the video, subscribe to the channel, and share with your family members, inshallah. Right, now let's have a look at the company. This is Home Depot. This is one of the companies that I've had in this portfolio for quite some time now. Just before we before we start looking at anything else, I want to look at the financials of this company, and one of the reasons I really like it. Like I said, it's been in my portfolio for quite some time, but I've not added to it. But look at this revenue growth. So from 2015, it was about $83 billion. And every single year it's been going up to right now $151 billion of basically total revenue. So that's how much they've made. The cost of that revenue is about 100 grand right now. So they're making about gross profit about of $50 billion, almost $51 billion. And then of course they have to pay some basically taxes and all of that stuff. And then the take away their net income is about $15 billion right now, which is basically decent enough. It's not, of course, because this is the reason why software companies are absolutely amazing investments, because look at the cost of this revenue here. We're looking about, they're making 150, they're basically spending 100 billion because of the store, because of the products that they sell and all of these things. In comparison to software, this will probably be the opposite. You probably would have 100 billion here on the gross profit and then 50 as the cost of the revenue. But either way, this is not a software company. Of course, they have a lot of overheads. They own their properties and all of these things. So it's quite expensive business to run. But their net income right now, we're looking at about $15 billion. And I think they have about 16, 17 billion in terms of free cash flow, which I will share with you guys in a second. So now let's have a look at a couple of more things before we move on. And looking at the balance sheet, I just want to check a couple of things, because this company, I just want to see in terms of liability side of things. And as you can see here, they have total assets of $79.3 billion. Now total basically liabilities of $77 billion. So the difference is about $2 billion. So yes, they have more assets, of course, than the liabilities, but that's a lot of liabilities if you think about it. Okay, right, now moving on here. So what we're going to do now is just kind of give you an overview of what the company does. Of course, Home Depot, of course, it sells basically building materials and home improvement products. Basically, they deal both with normal customers as well as professionals. And of course, they are in the consumer discretionary, home improvement, retail. And one of the investment theme for this company is the fact that they're a fantastic company and they're really well-run company. The company has returned $73 billion to its shareholders through dividends as well as a share buybacks over the last 5 years. And that's about 20% of their market cap, which is really huge. So I like the fact that they have an excellent dividend. They've been growing that dividend for quite some time, and they're buying back their own shares, which you will see in a second. Now, currently trading $336 per share, EPS about $15 right now, and they are a huge company, 330 billion market cap. They have a wide economic moat, and beta is right now is about 1. Now, current PE is about 22, and the forward PE is about 22. The 5-year average is about 22 as well. So it's trading fairly valued according to this, but the sector, the consumer's discretionary sector, is right now is about 13. The S&P 500 is about 28, and price to free cash flow, this company has basically traded about 19 right now. Now, looking at dividend side of things, they pay dividend of $8.68. That's about 2.5 and 8 in terms of percentage. Payout ratio looking about 58, and latest increase was almost 8%. The 5-year growth rate is about 14%, which is absolutely huge, and they have increased that dividend for 15 years in a row. The dividend safety is about 87%, so there's nothing to worry about because they have an excellent free cash flow of $17.8 billion, free cash flow yield of 5%, over 5%, and free cash flow margin of 12%, which is absolutely huge. Now, in terms of margins, we're looking at about 10% when it comes to profit margin, operating margin about 14%, return on equity 1,362, and return on invested capital of almost 40%, which is absolutely huge. Now, total return in the last 10 years, including dividends and price appreciation, is about 17%. Now, the revenue, obviously year-over-year growth in the last 5 years, we're looking at about almost 8%, and same, more or less same thing when it comes to EPS growth in the last 5 years. Now, current ratio is above 1, so which is basically means the company has more. We've seen it already. They've got $77 billion of current liabilities and $79 billion of assets. So that's basically nothing to worry about. Total assets, which means basically we have nothing to worry about. And current liabilities is covered by the current assets, which is really good. Now, growth estimate for next year is about 6%, then 3% after that every single year. So this is per annum. So next 5 years, they're expecting every single year 3% basically growth. Current price is 336, we've already seen. According to Morningstar, 265 is the current price, and Morningstar is basically saying it's about 30% premium. They've always said this is actually a very expensive company. So over the last, I think about last 3 years, they've always said it is very expensive. There's always been trading basically higher multiples, according to them anyway, very premium right now. Now, when it comes to Simply Wall Street, they're saying about $336 per share, which means basically it's undervalued about 6% right now. TipRanks is actually saying about 382. That's about 11% upside from where we are. It's a moderate buy according to them. Seeking Alpha 381, 10% upside from where we are, and also a buy. Now, I definitely kind of agree with these guys here. Okay, I think it's fairly valued right now. However, so you have to add some sort of a margin of safety. Definitely add margin of safety, maybe about 10%. Also, if you are, of course, new to investing and you basically, you have not invested in this company before, then maybe add about 10%. I've not seen this company come down quite a bit. So I'll show you. In fact, let's just go back here quickly. Year to date is actually down about 3%. So not huge, really. So I would definitely say maybe let it come down maybe another, what is it right now, maybe come down another 4-5%. And if you are interested, of course, then start looking into it, InshaAllah. But yeah, definitely I'm not adding to it right now, and I'll show you how many basically shares I have of this company. But when it comes to Sharia compliance side of things, absolutely no issues. I used to own the main competitor for this company, and that's Lowe's. And Lowe's basically, I've sold it quite some time ago, but it hasn't come down since I've actually sold. This is what I love about this company. Look at this. Okay, we've already seen the increase in that dividend for 15 years in a row, and I think it was 15 years, but they have also increased it for the last 5 years about 14%. So they're growing that dividend about 14%. The latest was almost 8%, and they're buying back the shares, which is absolutely amazing to see. This basically is a very well-run business, like I said at the beginning, and this is why I enjoyed having this type of companies in my portfolio, because you don't have to worry about this company producing free cash flow. You don't have to worry about the dividend cuts or anything like that. They're gonna have a predictable business, but the only issue is very cyclical business. What I mean by that is, when everyone was locked away during COVID time, this company went up quite a bit because people were just like buying stuff for their houses, because we were at home all day long, so they have to make their houses look nice and so on. And then, of course, after that, everyone is out, the kind of thing, and no one is buying brand new houses, no one is renovating, and for that reason, this stock is actually done not well at all when it comes to revenue side of things. So it is a very cyclical business, so you have to be mindful of that. So if the economy is doing well and people are buying homes and basically renovating their houses, and everyone is happy with their jobs and everything else, most likely people will go to this shop and basically buy products that they need for their homes and so on. So that's why I said it's very cyclical business, and you have to be mindful of that. So just quite quickly show you basically my shares. I've had these 14 shares for a very long time. Okay, I'm up about 20%, but as you can see here, okay, $287 per share is actually my average right now for this company. 336 is where it's at the moment. So if it comes down maybe another 5% or so, if we see a massive pullback, then potentially I will look into adding to this company, because I really would love to add another 6 shares just to round it up to maybe 20 shares and let it be for a while. Anyway, that's the company that I want to share with you guys. Let me know if you have any specific companies you want me to look at in the next few days. I've got a few other companies that I will be basically been asked by some of the brothers to look at, so I will be doing that, as well as of course a portfolio updates in dividends that I've received this month. Has been absolutely amazing for dividends, so I want to share that with you guys, inshallah. Anyway, stay tuned for all of that. Have a wonderful day. Assalamu Alaikum.